First quarter earnings from Uber are out. They're not great. They're not terrible. They're confusing to Wall Street a little bit. So let's talk about it. So I'm Cory Johnson, the Chief Market Strategist from the Futurum Group. And what we see from Uber's earnings are no earnings at all. They lost money in the quarter, which was a big surprise to Wall Street. We'll call that a miss, even though the revenues were just in line, $10.1 billion in the quarter. $10 billion in revenues. It's the first time ever for this company. That's a huge number. And that's a 15% increase from the previous year. And if you add up their mobility and delivery businesses, so you take out the freight business, which is still nascent compared to the other two, 19% year-over-year growth to $8.8 billion. And fantastic. Now, there was a little bit of confusion in the quarter because the income from operations, their business had a $172 million profit before taxes, and importantly, before they changed the value of some investments. They've got investments in a bunch of big companies, not least of which Didi, the Uber of China, and they devalued those investments, and so that takes a hit into the income statement because of the accounting treatment. So they didn't actually lose money on those things yet, but they've decided they are worth less, and so they are taking a charge on their income statement. So they had a loss in their income statement as a result. But if you want to understand how the business works, which is really all I care about, you got to look at the operating profits in this case, or their adjusted EBITDA, something I normally hate to do. And in that, you actually saw kind of nice growth for the company. So, Wall Street's not stupid. Why did that happen? Well, when you look a little bit deeper behind the headlines, let's look at some of the numbers. The number of trips was up 21% on a year-over-year basis. The number of users was up 15%. And people who use the service monthly, that was up 6%, so occasional users. So, all pretty good. And again, $172 million in income from operations, which is pretty strong. But their adjusted EBITDA number of $1.4 billion is up 82% on a year-over-year basis. And that's fantastic. But again, you've got to strip out all that junk from the devaluation of their investments. So again, gross bookings up 21%, adjusted EBITDA up 82%. And we look at the two big businesses, the mobility business, they call it, which is rides, that was up fantastically, up 30% on a year-over-year basis. And their food delivery business up 18%, also really nice. But again, the market didn't like their bookings number. So how many people use the app for something, whether it was delivery or booking or even freight? That was just flat on a quarter-by-quarter basis. So was it up on a year-over-year basis? Sure, 21%. But it was the same as last quarter, and that wasn't what Wall Street wanted, certainly. So the stock was down 8% after these numbers came out in the wee hours of the morning, even though the stock's been up 65% in the last year, which is pretty good. So interestingly, CEO Dara Khosrowshahi was talking about some of the drivers that are coming forward for this company, and one of them is people going back to work. Yeah, I see the tech bros out there with their down vests and they're going back to work. It's happening, and that could be good news for Uber.
With the pandemic, I think a lot of people who are kind of commuting to work, et cetera, stopped commuting. We have lost some of our most frequent customers. We see the weekday commute use case being particularly strong as people are coming back to work. Some folks may not like that, but we love it here at Uber, people getting back to work and getting back to the office. So there's an audience who kind of stopped using us as frequently as they used to. We were kind of a daily habit, and hopefully we will see that audience come back, and we're seeing evidence of that in terms of the weekday volumes being super strong.
All right, what's it all mean? What's the one number that tells us a whole lot about Uber? I want you to remember this one number, which I'll tell you about when we come back.
The Drill Down is brought to you by Futurum Group, where analysts, researchers, advisors, content creators, and marketing experts help business leaders anticipate and understand shifts in their industries and build strategies to leverage disruptive innovation. With deep analysis, Futurum Group's extensive industry experience delivers reliable research and data, thought leadership, and actionable advice to help you with your strategy and go-to-market efforts. Futurum Group.
First quarter results from Uber. Here's what you need to know. The thing you got to take away here is that revenues were up 15% to over $10 billion for the first time in the history of this company. But income from operations, while it was good at $172 million, what you saw from the actual profits for this company is they lost money because they took some new valuation investments they got, which was the charge in the income statement. But the one number that tells us a whole lot here is the bookings growth. And if you look on a sequential basis, compare the first quarter The fourth quarter of last year, you see the growth was 0.2%. And that was really disappointing. You would expect this business to have more and more bookings, not flat bookings on a sequential basis, but maybe it'll pick up. All right, check me out at X, at Cory TV, at Drill Down Pod on TikTok and Instagram, and the Futurum Group's YouTube page. All kinds of great stuff. Check it out. Drill Down Earnings, part of 6.5 Media.